92% of traders fail prop firm challenges. Not because they're dumb, but because they're undisciplined. They enter at the wrong times, chase losses, and use stop losses like landmines. This isn't just a motivational video. It's your survival guide for passing a prop firm trading challenge this year. Listen, many traders get sucked into the idea that they need towering stacks of indicators, complex charts, and endless data. But what happens? They end up tangled in confusion and losses, right? I get it. When you're starting out, the noise can feel overwhelming. Everyone's flashing their shiny tools, and you're left thinking you need all of it, or you're doomed. But here's a truth bomb for you. Clarity, not chaos, is the way to go. Imagine trading like a seasoned sailor. You don't need an armada to navigate the waters. You need a sturdy little boat and a clear map. Simple strategies and solid risk management. That's your compass. They keep you focused and headed in the right direction. Think of it this way. It's like being in a vast forest. You could wander aimlessly, overwhelmed by all the paths, or stick to the main trail, knowing it'll lead you to your destination. Don't let the sirens of overcomplication lure you off course. So here's what I want you to remember. The simpler your strategy, the easier it is to understand and manage your trades. That's your key to success. See the patterns, manage the risk, and keep your moves clean and deliberate. Stay tuned, because up next, we're digging into how to develop that simplicity with clarity in your trading plan. Ready? Let's do this. Still trading like it's the Wild West? That's a big mistake. Picture a sniper sitting in silence, waiting for just the right moment to pull the trigger. That's how you got to approach trading. Dive into the market without a plan or understanding of timing. You're setting yourself up for failure. Missing prime moments to trade? That's like fishing without bait. Frustrating and pointless. So let's break this down for a moment. Timing is everything. Think about critical market movements that can make or break your success rate. Align yourself with the market's pulse, and you won't just float, you'll soar. Certain hours create high volatility and opportunity. These are your prime trading sessions, or as I like to call them, the kill zones. Imagine it like this. The market is awake and alive during specific times. The New York session, a goldmine of activity. The London session, another hotspot. Picture the market like a roller coaster, with peaks and drops. Jump in during the wrong moments, and you could miss out on the exhilarating highs. Let's say you're aiming to catch that first wave of traders, riding the excitement in the early morning. When liquidity surges and opportunities peak, that's the magic. Think of the first few hours after the market opens. When the charts align and every tick brings you closer to your target, that's when you need to strike. But here's the catch. You've got to be aware of when those kill zones occur. Check your trading calendar, mark those hours, and sit down like the sniper you're meant to be. Ready to discover these prime moments and harness their power. It's time to step away from chaotic gambles and into a strategy-driven approach. Next, we'll look at how to identify these sessions and maximize your trading potential. Get ready to level up. What if I told you that the very mechanism designed to protect your trading account could lead to your downfall? Sounds crazy, right? But here's the deal. Stop losses are a double-edged sword. Used strategically, they're your best friend, preventing catastrophic losses and giving you peace of mind. Mismanage them, and they become your worst enemy, a source of frustration that haunts your trading journey. You set a stop loss, feeling all responsible, aiming to protect your hard-earned cash. But what happens when the market whipsaws? You get stopped out for a loss. That gut-wrenching feeling hits hard. Your stop loss just betrayed you. I get it. Many traders throw their hands up in frustration, swearing off stop losses altogether. Dangerous trap. Stop losses are like a security blanket. They comfort you when the market turns chaotic. But if you cling to them without a plan, you're asking for trouble. A wise trader doesn't just place them willy-nilly, they think strategically. Imagine if you set a stop loss just beneath a key support level. You're basically asking the market to rip that safety net away before swinging back up. Let me share a quick story. I once watched a fellow trader, someone I respect, meticulously plan a trade, setting stops at what he thought were safe levels. Out of nowhere, news hits, price spikes down to hit his stops, and suddenly he's out, helplessly watching the trade reverse right after. It's painful, but it taught him a lesson. Don't just follow the crowd. Use your head with those stop losses. Here's the kicker. You can wield stop losses effectively when you understand how they work. Anticipate market behavior, recognize key levels, and adapt. Think of them as a strategic line in the sand. Place them where they make sense, not just as a number based on your risk tolerance. As you navigate your trading journey, ask yourself, are you using stop losses mindlessly, or are you genuinely leveraging them to protect your investments? The difference can make or break your trading experience. Next, we're diving into how to set those stop losses strategically and stop turning them into your worst enemy. Ever find yourself desperately trying to claw back money you just lost? It's like being stuck in quicksand. The more you struggle, the deeper you sink. That urge to chase losses is a slippery slope. A classic trap too many traders fall into, and let me tell you, it can bury you financially and mentally. I've been there. Take a hit on a trade. Maybe you miscalculated. Maybe the market just didn't play nice that day. Whatever the reason, you feel that rush of frustration. I can't let this slide. I need my money back. That's when it gets dangerous. Instead of sticking to your plan, you start executing trades recklessly. It's the gambler's fallacy, baby, and it can cripple you. Trust me, I've felt the aftermath, a cocktail of regret and anxiety that eats at you while you're trying to sleep at night. How do we break this cycle? Let's think about adopting a disciplined mindset. Picture this. Instead of losing your cool, step back, breathe, and remind yourself that trading is a marathon, not a sprint. Each loss isn't the end, it's part of the journey. It's like a sports team. Losing one game doesn't mean you throw the whole season away. You learn, adjust, and come back stronger. A simple trick? Establish a strict set of rules for entering and exiting trades. Stick to them like glue. Your portfolio isn't a casino, it's a business. Like any good business, you need a strategy. You can also start using stop-loss orders to limit potential losses and give yourself a clear exit strategy before emotions kick in. Don't fall for that trap of thinking you can make it all back in one go. It never works out, and when it doesn't, the cycle continues, leaving you feeling defeated. So what's it going to be? Ready to take control and break free from the relentless chase? Or are you going to let frustration dictate your trading? Hang tight, we're just getting warmed up. Next, let's dive into strategies to help you solidify that disciplined mindset and keep your head in the game for the long haul. Are you leaving the fate of your trades to chance? Let me tell you, that's a recipe for disaster. Imagine a treasure hunt without a map. You're just running around, hoping you'll stumble across that buried gold, but likely ending up empty-handed, trading without tracking. Same thing, you've got to turn guesswork into strategy. Tracking your trades meticulously is like having that treasure map. It guides you through choppy waters, helping you make decisions based on data, not just instinct. When you analyze past trades, you uncover patterns revealing what works and what doesn't. Picture a journal where you jot down every trade, when you bought, when you sold, what conditions were at play over time. That journal becomes a goldmine of insights. If you do this right, certain setups might yield profits more often than others. Let's take a closer look at how data can light the way. Imagine you've been trading Euro USD and see a clear pattern. Every time you enter a trade, right after a specific market event, like economic news, your odds of winning increase. That's data talking, my friend. You can track that and refine your strategy. It's all about spotting those little clues. But here's the kicker. If you ignore these patterns, you're falling into a trap. You'll keep stumbling in the dark, making the same mistakes over and over. You don't want to be that trader, do you? Shift gears and use data to guide your decisions. What could this look like for you? Simple. Create a spreadsheet, log every trade. Soon you'll see where you're making gains and where you're bleeding money. So, what will you find on your trading map? What insights are waiting to be uncovered? Dig deep, analyze, and start making decisions that matter. Is your mindset the hidden barrier to trading success? Think about it. Every warrior going into battle knows that their state of mind is crucial. In trading, it's no different. Your mindset can either lift you to victory or drag you down in defeat. If you've been feeling frustrated, stuck, or ready to throw in the towel, you're not alone. Many traders battle their worst enemy, in their heads. So let's dive in and tackle how to build that mental fortitude. First off, recognize the power in your own head. Trading isn't just about numbers, it's about you. Your feelings, doubts, anxiety, they can propel you forward or hold you back. When the pressure's on and you've taken a hit, what's your reaction? Do you freeze, second-guessing every decision? Or do you shake it off and keep moving? Learning to respond to those psychological triggers is where the magic happens. Let me break it down. Picture this. You're at the edge of a cliff, a beautiful view ahead, but scared to leap. In trading, that leap is recognizing risk but taking the plunge anyway. You must develop resilience to withstand loss, uncertainty, and failure. It's not about ignoring emotions, but harnessing them. Think of your mindset as a muscle. The more you train it, the stronger it gets. Here's a quick strategy. Every time you face a tough decision or a loss, ask, what can I learn? Shift focus from failure to lesson. It's like a judo move. You're using the situation's force to gain balance instead of toppling under it. Those lessons sharpen your trading strategy and build a rock-solid mindset. And don't forget visualization. Successful athletes use it. Why shouldn't you? Close your eyes, picture executing a perfect trade. Imagine numbers stacking up, confidence surging as you hit targets. You've got to see it first, then make it happen. So, how do you cultivate this robust trading psychology? Start small, set achievable goals that build confidence. With each small win, you stack mental armor for the bigger battles ahead. It's all about the long game, my friend. Subscribe to Trading Strategist, the new best trading channel on YouTube, and like this video. I'll see you in the next one. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.